Well, happy Monday. It's September 9th. Want to bring you the latest data here in the Austin metro area. Of course, we're going to start with mortgage rates because that is some excellent news. I'll also show you some of the latest trends here in the market, and I'll finish off with some positive headlines as well. Let's start with mortgage rates. So, we are sitting right now at the lowest mortgage rate we have had since April of 2023. So, a year and a half. We have not seen rates this low, and we are starting to see some of the other products touch in the fives. By the way, this is a kind of average rate. I would say if you are a good credit buyer right now, you probably have a five on the front of a 30-year fixed rate mortgage. I just finished refinancing my house last week. I went from 7.5%. I am now at 5.99% on a refinance. And so mortgage rates are looking good. Again, if I come back here, lowest levels since April of 2023. And let me show you this chart down here at the bottom. This is looking back at this year. So this is 2024. And rates had come off of 8% last fall. We started the year in the kind of mid to upper sixes, and we thought things were looking better. And then, of course, the rates just went up, up, and up until April. Really, as I've said before, just kind of shut the market off. But let's look at this. This is basically the end of April. We were at peak rates of this year, 7.5%. And since then, we have seen a nice come down. We stayed in the sevens until we got to early July. And since then, it has been a steady fall down into the lower six range. And the Federal Reserve this month will be making an announcement if they are going to start lowering their rate. If they do that, I think it will also have some psychological benefit to the market. May not change the actual mortgage rate or bond rates that much. We'll see. Some of that may already be baked in, but I think that's going to be more psychological. But the good news right now is we are seeing the lowest rates we've had in a year and a half. All right, let's talk about the market. Here's one thing I can say: it hasn't had a huge effect on the market yet. We are not seeing necessarily a swell of buyers come into the market. We're not necessarily feeling multiple offers pouring in on homes. I think, if anything, it's just helping those buyers who are in the market or those that need to refinance out of higher rates that they purchased in the past few years. But we haven't yet felt this big swell of buyer activity due to the falling rates. So this is a look at original price versus sold price over the past 12 months. The green is list prices, okay? And this is not a particular house. This is just the market. And here's the spring where you normally see people getting a little more optimistic, a little more aggressive with their price. And prices went up until about April. And what happened in April? Rates went up, right? So it just really softened the buyer market. Buyers really weren't buying as much as they normally do in that time frame. And so what happened was is the median prices really just flattened out. They did not keep going up in the spring. Since then, the market's list price has been coming down. That does not necessarily mean the house prices have come down that much, but what's happened is the list prices have come down pretty noticeably. So the market was peaking around 530. Now we're around 475. Again, that's just market listings. But in terms of sold median, we were about 455 in April. We're sitting right now. This is the end of August, 438. Ignore these lines right now. It's just too early in September to know where that's going to finish off. But closings right now are kind of on par with where they were last month, and we'll see how that holds up. I have a feeling it's just going to start to flatten off as we get through the rest of the year. If rates are coming down, it's going to help buyers make a little better offers, and that may flatten out our median price. We'll see if there's any appreciation or depreciation from last year, but right now, I think we're down about 5% off this time last year. Here's the sales price to list price ratio. What is this showing us? So if you take all those sales in the market, where is the final price in relationship to the final list price, not the original list price, but the final? So if you started at 500, you drop to 475, and then you sell at 465, it's the difference between 475 and 465. So in the middle of the pandemic, everybody was bidding way over, and you can see these on average. We peaked out at 7% above list, which is insane. But in a normal market, this was pre-pandemic, you're within a one, if you take the whole market, you're within 1% on average, a little below full list price, but that's a solid market right there. Here's what it looks like when rates go up and you're overpriced. You can see that we had big dips in the winter. Maybe in the spring, it got within that 1% range, and then it comes back down. So right now, we're about 2% off on average from the final list price. So let's say a typical home final list price is selling within about 98% of that price. So that's what this chart is showing us. If the market starts getting better, we'll see these lines tighten up a little more and stay more around that 1% under rate. This is the historic sales price trend. So this is looking at the median values in the market since peak pandemic. Here we are back in April 2022. That was peak pandemic, end of it when the rates went up. You can see our biggest fall in price really was second half of 2022 into early spring 2023. We got a bounce in the spring of 2023. So the spring saw some bounce, but then rates stayed high. In fact, they kept going from 7 all the way up to 8% in the second half of 2023. And it really brought the median prices down. And then, of course, here's our spring this year. But you can see huge run up, median run up, softer run up. So what's happening is that ripple is just starting to level off. And right now, here is the fall, or I should say summer and fall of this year. And again, second half of the year, we typically see that median value come down. The question is it going to come down to how far it went last, let's say, late fall? Don't know yet. That's what we're keeping an eye on. That will determine if we have any appreciation over the last year or any depreciation over the last year. But that's a look at our long-term 2-year trend. Finally, here's a couple headlines. So Austin was just ranked number 3 on a new list of large cities for real estate markets. The study looked at 17 metrics from median home price to the ratio of the rent price to the sale price, vacancy, housing, affordability, population, and job growth. A lot of Dallas suburbs made the top of the list. So it says Austin earned its ranking because of the metro area's population growth, especially in the suburbs, where home sales continue to increase, which is true. We've seen a lot of that in Hayes County to the south. And then it said our median home price was around $450 in July. And Austin proper, meaning the city limits, it's around $585. And of course, we've been booming in apartment construction. And that is also helping with the affordability because it's helping keep rents in check. Great for tenants, not so great for landlords right now, but it is helping keep rents in check in the market. And then here's one more article, 3 Central Texas suburbs on booming U.S. cities list with homes under 500,000. And the top one around us is Hutto. And for those of you, I've had a few clients this year, in fact, several where we've bought properties in Hutto and had several last year as well. So Hutto is considered one of the top 50 most affordable housing markets in the U.S. for homes under 500,000. Another one, a little bit of a surprise, was Canyon Lake, which is kind of southwest of here, a little closer to San Antonio. But typically it's about an hour from San Antonio, an hour from Austin. And it's pretty out there. It's part of the hill country. It's not nearly as big. I wouldn't really call it a city, but it's definitely an area where I think we're seeing affordability come back to the market. So what can we expect? I'm going to go back to this chart right here. What can we expect maybe for the next month or two? I mean, obviously, we're all watching the Fed. We know that they're going to announce this month that they will start lowering their rate. It has been almost 2 years since they raised their rate to the peak level. That was early 2023. So this is nice. We need some reprieve on rates that will help the housing market. How much of it is going to be a boon to the local market? It's really hard to say. I would say we haven't felt as much of that impact yet. We are feeling buyers back in the market because the summer's over, everybody's back in town. So we are feeling activity pick up a little bit. I wouldn't say necessarily we're seeing it in closed sales just yet. So we're keeping an eye on that. We obviously have buyers in the market. We've got several listings on the market. We've got leasing properties on the market. So we're trying to watch that. In terms of rentals, we have really felt the market slow down. I think, again, high inventory, and typically the rental season kind of peaks out and ends around August, early September. So now we're in a typically slower time to rent properties, me included. I have one of my own properties on the market right now. I had two. We got one leased last week, but I've had another one on the market for about 3 weeks now. And traffic activity has been pretty slow. So we're watching that. It's going to impact those rates, I think, for rentals over the next few weeks. Anyways, I hope this was helpful. If you're looking to buy, sell, or invest in Austin, make sure to reach out to us. And of course, if you want to watch these videos each and every week, make sure to click the subscribe button. You can go to our YouTube channel at Ryan Kelly Group. We post these videos each and every week. Anyways, we've got a gorgeous fall week right now, even though it's still technically summer, but we're like in 80s. It's dry. The humidity's low. It's fantastic. So I hope you get to spend some outside time this week, and we'll talk to you next Monday. Thanks.